Hello. You know, when you turn on the regional news channels, CNBC, Bloomberg, or you read some of the sophisticated financial markets press, how much of that do you really understand? Honestly now. But the question isn't so much how much do you understand, the question is how much do you need to understand. And Thomas Matthew from Traderence is here with us to help us understand that, because usually, Thomas, hi there, usually people who are investors ignore the news. They don't necessarily pay attention to the big financial media because they're taking a slow and steady approach and they're not flustered by the market volatility. But you take a very different approach. Why?
In the objective of the Traderence school is basically helping students or investors taking a right approach by looking at daily news. The reason is simple. The whole global market right now is sitting on the debt. Any news that's coming out will be a severe effect to the particular portfolio investing. So as a new investor, if you don't pay attention to CNBC or Bloomberg, I think it's about time for you to look at simple news like this morning, the RBA news. Decision making. So the Australian government decided to keep the RBA as 3.5. What does that affect the market? So the Australian dollar has gone down. The entire S&P 500 CFD has gone down. The US dollar against euro dollar is taking effect right now. And after when the London market opens, there's another news coming up. So if you don't pay attention to this news and you're buying stocks, not knowing that this is going to be a major effect to your stock that you're purchasing, you're going to start losing money. So a good place to start is to understand the basic news. That's what we do.
But if the RBA kept interest rates unchanged rather than lowered them, wouldn't that be a boost for the Australian dollar?
Yes and no, because this Friday, there's another major news, which is that China is going to announce our economic sentiments. So if the China is going to give negative sentiments, and with the RBA not changing any interest rate, it's going to get a severe effect on the Aussie dollar, because last month, the Australian has lost about 27,000 jobs. The Chinese economy has gone down. And again, Mario did not make a serious decision last Thursday on the news of whatever it takes to make euro okay. But there was nothing done. He says the word not now. So that word not now has pushed the euro dollar right down. So now the Australians are waiting for this Friday Chinese news. Now what is that going to take effect? If the Australians don't change the interest rate, and their interest is pretty good. So the Germans, the Czechs are all going to transfer money to Australia, and the Australian currency is going to get strong. They will affect the retail sales. They will affect the tourism. There's a lot of things going to affect. So is Australian going to pay a little bit more attention whether to reduce or not to reduce it? So what effect as a trader? As a trader, I pay very close attention to this news, which is going to happen on Thursday and Friday, and Sunday for the China. So Australia is going to get a big hit, which is coming.
Okay, so Mario Draghi, the president of the European Central Bank, who you mentioned just now, he is being watched. But does that mean necessarily that as an investor you should do nothing but watch the channels and then react? I thought the whole point of investing was to put your money in and over time ignore the market fluctuations. You will benefit in the longer term.
You say, I've been an investor for 25 years. I followed Warren Buffett style. I followed George Soros style. I followed Jim Rogers style. You name it, I've done Paulson style hedge fund. You know, today, it is not about long-term investment. If I were to put the money for a long-term investment, I got to be prepared for the major crackdown that's coming. Europe may collapse to double dip. UK may end up into the recession very soon. US is on the cliff right now. No, ECB has only 0.75% to play with right now. If they would adjust interest rate, you know where the euro is going to go. So Mario's coming up with the LTRO, they come up with the ECM, and list goes on.
I thought it was the ESM.
Yes, no. Think about it, the CDO, the CLO, and the mini bonds in the year 2008. They just changed the word to something of ECM and stuff like that. So the question is, if they continue creating this debt after debt and supporting Spain, supporting Italy, no, Mario only can do so much. Just why the Germans refused to take Mario word as per se. So this guy, the Wolfgang and the group, decided not to go with Mario, but to slow down Mario down, because if Mario were to put in a lot of money and rescue the Spain and Italy bonds, Mario is going to be putting a lot more debt into it. So I think the question now is, will Mario take a very serious action in the next 2 weeks? Again, news.
Well, if he did, then he would be Super Mario, I guess. But, you know, as an investor, again, the conventional wisdom is that you buy and then you put it in the bottom drawer, you forget about it for a while. As long as you buy good quality companies with sustainable businesses and stable cash flows and so on, and you know, maybe 6 or 12 months later you'll have another look at them.
It's yes and no. For example, the company like Apple. No, I buy Apple when Apple was $90. Today, Apple's about $600. It's fluctuating between $550 to $600, but Apple's a great company. The Apple doesn't give out dividends, they give out shares.
Well, precisely. And so but actually they are paying a dividend mid-August. But if you are going to have an approach of riding the news, then wouldn't you sell every time Samsung won a patent dispute against Apple? Wouldn't you then buy every time Apple came out with a new iPhone? Rather than buy at 90 and then hold.
Now, just for information, we are trading from 7 o'clock at night, right at 4 o'clock in the morning, every day, Monday to Friday. We buy Apple, we sell Apple, we buy Petra Coal, we sell that, we buy Samsung, we sell and buy. And we're doing that every night because the opportunity is unbelievable. Every time when the news comes out, for example, last Friday, non-farm payroll was excellent, 163 jobs. But on the other side, the payroll was not that good. So, but the news was good overall. So what I do, so we take the opportunity to long the market. The US dollar is supposed to strengthen because the non-farm payroll was good. But the entire market reversed for simple reason because of the news. The news that the ECB and the Fed is going to come up with some QE, which is along the table right now. Whether it's going to start or not, you wouldn't want to put your money in the bank and hoping that 10 years time you're going to make a lot of money when you don't know that there's a major problem waiting ahead of us and we just collapse overnight and your long-term investment will go down. So the question is, yes, you can do long-term, but at the same time, you've got to pay attention to this little news that's coming in between to correct your long-term saving. So if you're a good investor, I would highly recommend you to pay attention day to day, not every day, but at least a week, a month, those major news, the interest rate, ECB announcements, Fed, Obama's election, which is coming up.
November, yes.
And S&P is now on the fifth wave right now. Now it's 1390. They may push up to 1420. When the S&P goes up to 1420, believe me, the euro is going to go up, the pound is going to go up, the Australian dollar is going to go up. Now, so if you don't pay attention to such news, it's a serious thing.
Okay. Let me just rewind over the last 5 minutes or so that we've been talking, because what we're hearing from you is a lot of acronyms, and we're hearing you on first-name basis with the ECB president. Let's say you get all of this news, and you hear about China PMI, and you hear about the various things that you've talked about. What do you then do with that? Okay, so let's say you hear that China PMI, as it was just a few weeks ago, was just at the 50 mark, right? Just at that level.
Which I don't think is an accurate number.
Makes the difference between contraction and expansion. And the fact that you say it's possibly not an accurate number supports what I'm about to say. And that is that there are various interpretations of the news as well. One person might say, RBA stays on hold. Reserve Bank of Australia keeps interest rates unchanged. Therefore, the Australian dollar should go up. Others will say, RBA keeps interest rates on hold. Therefore, the Australian dollar should go down. So the interpretation of the news is just as important, but arguably that's the most difficult part. How do you, as a newbie, get your head around that?
Now, if you're wanting to go to the market and be a good trader, now, we can't control the analysts. We can't control the economy. We can't control the governments. We can't control the news. So what we do as a trader is let the news come out first. After the news is out, after 1 hour, you see the news settling down. And it depends, the news release are usually done over almost Friday, almost the last day of the week, or on Sunday night, or the major news. They won't release the news on Monday, major news. It'd be crazy if you release the major news, bad news on Monday, the market's going to get hit. So what we do, we let the news appear first, and then we compare with other instruments and other technical analyses and other what they call indicators that we have, knowing that the price support or the resistance level is broken. When those patterns have taken place, and we know that what you call the traders are dumping the entire portfolio, we will follow what the big guys are doing, what the institutions are doing. We don't want to fight with the institutions. We're not going to fight with the big guys. We just follow them, and that's what we do. That's why our rate of return has been very conservative, between 5 to 8% consistent every month without fail. And we're also getting 20 to 30% on a big portfolio every year without fail. It's because we trade after news. But sometimes we trade before the news. We can anticipate. What happened last week on Thursday, Mario said that he will do something big. So the whole world was waiting for Mario to say something. One word, just one word for Mario, not now. The word not now have moved the entire market up and down at a rapid rate. If you're a good trader, you actually can take advantage of that word not now. You know, so here again, as a short-term investor, I look at this opportunity. As a long-term investor, I look at China, for example. China is my indicator. If China is not performing well, I will unload all my portfolio and stay on the sideline for a while, because cash is king. I want to wait. I don't want to rush, because the China is showing a lot of sign of weakness right now. So if I don't take the heat and I hold back all my investment and keep aside, I might just get hit, and again, a repeat of 2008 will start again. So why not stand aside, look at the market as a whole, and read the news on a weekly basis, and see where's the market heading, and choose your portfolio correctly. There's a lot of good companies. For example, OCBC Bank is a great company. I'll put my money in OCBC Bank. For example, I don't mind putting money in DBS. I don't mind putting money into Standard Chartered. But again, today the news on Standard Chartered is they're siphoning $250 billion to Iran. So
that's the allegation, yes.
Yeah, so that's where I'm fear. But so rumors, when the rumors comes, people react. 6% in London and Hong Kong, the shares gone down. So I sell on rumors. I don't wait. I just sell. And when the news comes out, then I react to the news. So here again, as a short-term investor, we take opportunity. As a long-term, I hold on for a while.
Let me then draw this conversation to a close by looking at that other phrase that I'm sure you've heard in the market before. Buy the rumor, sell the news.
That's right.
Meaning to say that in anticipation of the news, arguably there's much more action in the market than once the news has actually been released.
That's right.
Therefore, again, by the time it's in the press, is it already in the price?
That's right. It's already.
So there's not much point following the news if actually all of the action is before the news comes out.
It's about 5 minutes before. But as a trader, young trader, I'll wait after the news because you can take the balance, which is all the time is a good thing. But I just want to say something. One of the things as a Singaporean trader, if you're thinking of coming and investing in the market, a few things you need to know. Number one, get to know the timing of trading. You don't trade in the morning when the Australian market open or the Japanese Tokyo market. It's very low volume. You're not going to waste time taking the trades. You're going to wait until the London market open at 3 o'clock. When London opens, you can see some movement. So as a stock trader, I see what the sentiments of the London market first. If the London market is showing a lot of weak sign, I may want to hold my position. And then I see the US market, when 9 o'clock, when the US market opens, the free market opens for 8:30 in the night. When I see the market is rising, and I know tomorrow I'm going to be prepared to buy Singapore stocks. So if you understand the timing of trade, we're not gamblers. We don't trade every now and then, buy a CFD, sell a CFD. You make the broker rich. We don't want to make the broker rich. We want to make ourselves rich. And so we pay very close attention to what they call the time of trading. And for Singapore especially, it's great because the London market open at 3 o'clock. It's a fantastic time. So we trade after news. Before news depends only on non-farm payroll. So major news, we take 5 minutes, anticipate on the rumors, and then sell on rumors. You're right, absolutely right, and we buy on news. Absolutely right, we do that.
Good to see you. Thank you so much for coming in. Thomas Matthew from Traderence. And for more information on Singapore Investment Week, look at the website that's appearing now at the bottom of your screen. I'm Mark Lowdy. Thanks for watching.